What's up, guys?
Hey.
I am Andrew Gismondi. This is my first time in this office, so I don't really know any of you. Give me I'm just gonna make this interactive. Basically, this is talking about like forming an LLC, paying yourself out of an LLC, setting up a profit and loss statement to kind of track your business on a monthly basis, and just kind of the advantages of that. So I'll talk about kind of like my personal story and why I teach this class and why it says 2019 on that slideshow. But before I dive into that, like how long have you guys like been in the business? Who's like less than, I don't know, who's less than a year in business? Got one. Who's just shout it out. There's like 10 of us. So
4 years.
4 years, 5 years, 3. All right, so we got a you're on the panel.
Yeah.
What you understand it's
We things like a lot longer.
All right. There you go. We're going to talk about all that. That's great. So, I think, that's maybe the perfect way into this, right? Of like, a lot of people think about, you're selling real estate and you treat it like a job, right? And it is a job because it takes up the amount of time that a job would take, and it's what puts food on your table and all that stuff. But there is a leap that takes place, like a mental leap, going from treating it as a job to treating it as a business that you're the owner of, and you are the owner of a real estate sales business. And that sounds kind of obvious and it sounds like a talking point, but it really is actually like a shift in mentality that takes place. And the reason why I talk about this and I teach this class and I develop this thing is because this was the big bang for me. And really, like, once I embraced this as being, once I got myself set up as an LLC, once I was operating a profit and loss statement, just the world opened. I mean, literally, like my first 6 years in real estate before I was doing this versus the 6 years since then are totally night and day, and everything has kind of taken off for me, really. And I credit it to that, leap that took place at that time. Are you also with the home care business, or you're a real estate agent? Agent? Great. How long have you been licensed for?
2016.
All right, there you go.
I'm on the team.
Fantastic. Look at that. Let's go. All right. So basically, for the people here that are real estate agents, like just shout out, like what's units a year, volume, like just give me an idea, like kind of where your businesses are at. I don't know, whoever wants to go first, I'll invite you, it's fine. 15, 20 units or? Okay, cool. Everybody else?
Yeah,
Okay, cool. So this is setting yourself up as an LLC. Normally, there's a tax savings, and that's normally the thing that kind of hooks people in, is that you will pay less money in taxes if you do it this way, as opposed to having your commission checks paid directly to you as a person. The cutoff for that normally takes place once you're netting around $75,000. So if people in this room are doing 15-ish houses a year, you're probably north of that. Where if you're not presently set up like this, you will off the bat save 5 to 10 grand a year in taxes if you take my advice and just set this thing up. But as you continue to scale your business and go from 15 to 20 to 30 to 40 over time, that savings just gets bigger and bigger and bigger. But I always tell people, like, most of the time I talk to people and they'll set up the LLC, but they stop short of having the actual P&L where they're actually in their business looking at what's working and what's not working on a monthly basis. And at that point, you kind of miss the bigger picture. It's like, cool, you saved 5 grand, but like you're missing the business acumen that comes with that, which allows you to scale and take on additional expenses and track your ROI of anything you're spending on lead gen. So I'm going to cover all that here today.
Is there any downside to having an LLC and not netting that per year?
Yeah. So thank you for asking. And I'll cover a lot of this stuff, just like sort of going through the slideshow. But basically, think of it like this, right? Agent just starting out, they're in their first year in real estate. Their commission checks are going to come to them, right? So I'm Andrew Gismondi. First couple years in real estate, my commission checks were all made payable to Andrew. And I took them and I, I'll get into kind of what that looks like with just different bank accounts and just make sure you're not commingling and setting money aside for taxes. There's a way to do that well. When you set up an LLC, the structure is that the commission checks go to the LLC, and the LLC pays you a W-2 salary as if you're an employee of the business, but you're also the owner. So you'll be filing 2 separate tax returns, one for yourself and one for your business. So there's an additional cost that you'll pay to your accountant to do that. But the savings, once you're netting more than about $75,000 a year, the savings from doing it this way will offset the cost of paying your accountant double. And the more that you make, the wider that gap becomes, the more the savings can come in. So I always tell a story, and I don't know if you would be happy with me telling the story, but I teach this class and I tell the story. When Mike McCann joined KW Philly in 2019, I actually helped him set up his LLC. He was at Berkshire Hathaway for 30 years. I've never heard of doing it this way. Mike McCann probably overpaid his taxes by $10 million over that span of time. You know what I mean? Just by being the number one. I was born in 1988. He's been the number one real estate agent in the Philadelphia area since 1988 and was not doing something that a $75,000 producer should be doing. So, take that into consideration there. It's kind of wow. So I'll give you this is in here intentionally. I don't update this because it leads into a good story why it says 2019. So I got licensed in 2012. I was 24 years old. I started off on a team, then I left that team. I went solo, and I was at a different brokerage. I joined KW Philly in September of 2018. So I was starting my career at banker, was there, loved it. It was great, but I got to the point where I was doing 30, 40 transactions a year for 2015, 2016, 2017, 2018. I had kind of plateaued. I wasn't even 30 years old yet. I knew my business needed an assistant, but I was not mentally prepared to be somebody's manager. I had never really worked in a company before. I just got out of college and kind of became a real estate agent. So I really didn't have any experience in being someone's manager. But I also just kept being how do people take on a salary? You're going to pay this person $40 grand a year. Who has 40 grand? That's crazy. How do I do that? It doesn't make any sense. And they're you have to have 6 months cash reserves. I'm that's 20 grand. Who, what? Where am I missing this? So I looked around at everybody that was at my old brokerage, and there was no one there that even if I hired an assistant, if that person wanted to go outside and smoke a cigarette, there was no one for them to do that with. There just was no culture of team building or of hiring leverage for yourself. It was all a bunch of high producing solo agents. And one by one, they all kind of hit the point in their career where they were I need to start a team, or I need to build infrastructure around me. And they all left one by one to come to KW. And I was one of the last hangers on with a loyal person. So I was there, but the business was ready for an assistant about 2 years before I was ready for an assistant, mentally and also financially. And once I started learning about all of this, I joined KW, and the day I joined KW, I put the ad up on Indeed or wherever it was on, trying to hire somebody. I started asking around, doing everything. And within my first 2 weeks at KW, they brought in a guest speaker. It was one of these KW University approved speakers. They come in for the whole day. And they taught a class, which is a Keller Williams class called Agent Financials. And it's basically the 8-hour version of what I'm going to do here in 45 minutes. And my head hurt at the end of this thing. I was just I've never heard any of these concepts before. I never heard of any real estate agents in LLC. I never heard of a profit and loss statement. I am used to just doing my taxes in April, and that's when I figure out how much money I made last year. I'm not operating a business like a business. Pepsi doesn't run that way. Why? What am I doing? And I literally went home, went to sleep at 6 p.m., woke up the next day. I just my head hurt. I was over. I realized that I'm trying to hire somebody, but my foundation is not right. And I basically signed up for the ALC at KW Philly. Got put in charge of the finance department of the ALC. And when you're on the finance department, your job is to learn this enough that you can teach it in front of people at your market center And your job is to get one other agent who's not being run like this and teach them how to do it so that they can do it as well. You just get one agent over the course of a year, you are the best ALC finance chair that the brokerage has ever. So I developed this in September of 2019. It's about a year after I joined KW. I joined in September of 2018. It took me about 6 months to open all the bank accounts, do all the stuff, everything that's in here, form my LLC, get it. At the time was only licensed in PA. I'm now PA, Jersey, Delaware, Maryland. Got all that set up there, and hired my first assistant in. I guess I went live in May is when my LLC formally launched, and I started operating out of it in May of 2019. June of 2019, I hired my assistant. Obviously taught this class sometime around September of 2019. January of 2020, got hired to be the broker of record for KW Philly, which at the time was the largest brokerage in the state of Pennsylvania. June of 2020, got hired by McCann to be the broker of record for Mainline. Now I'm doing both of those jobs and I'm selling real estate. And 2020 was my best year ever selling real estate. So literally within 1 year of setting this whole thing up, it just took off. 2021, I started my own team. I had 2 agents working for me and still my assistant. 2022, I realized I hated that and I sold my team to join Jim Roach Real Estate Team, which is now Rarity. I haven't sold a house in 2.5 years. I'm an owner of KW Empower. I'm still the broker of record of KW Mainline. And I run the Rarity team with Jim. We have 53 agents and do about, last year we did 250 million in sales. So yeah, I mean, shit works. I'm just up here talking like they were like, come out here and talk about lead gen. I was like, I'm not talking about lead gen. So this is where we're at with it. So yeah, I think we just covered a bunch of this, like kind of what's the point of setting all this stuff up. You know, these are all the flashy things realtors like to hear, right? If you actually are tracking your money, you become more profitable, you'll sell more houses, you'll be able to hire an assistant. If you're not an LLC and you want to hire an assistant, you're going to write a personal check every 2 weeks. Like, what's your plan? You're going to give them a brown paper bag full of cash? Like, how are you going to do it if you're not a company, right? They want to work for, if you want somebody that's actually like super talented to quit their job and come work for you and you're not even a company, like how are you going to attract that person, right? What else on here? You pay less in taxes. We talked about that. And then the last one is just because real estate agents like to buy investment properties. So yeah, if you make more money, you'll probably do that too, right? All right. So who has read Millionaire Real Estate Agent, the book? We got a couple, yeah. Almost everybody. That's legit. Wait, are any of the realtors not read it? Yeah? Yeah. You can't do this. This is torture to me. I can't read.
They still go to the library.
There's like a TikTok trend right now that's like the woman shows her boyfriend or her husband, and it's just like how long it takes them to read the caption of the thing. Like that's me. Can't read books. So I do audiobooks all the time. But Millionaire Real Estate Agent, for those of you who haven't read it, it's the Bible of how to sell real estate. It is the definitive. There are plenty of books about how to sell real estate. Millionaire Real Estate Agent is the type of book that is not intended to be read cover to cover. It's textbooks. You wouldn't like sit down with a science textbook and read it cover to cover. Right? It's like you should read it cover to cover once so that you kind of know what's in it. But your experience the first time you try to read it is going to be like, for chapter 1, yep, that makes total sense and is applicable to me. Chapter 2 makes total sense, is applicable to me. Chapter 3, yep. Chapter 4, you're losing me. Chapter 5, this is for someone making twice as much money as me. Chapter 6, this is for someone making 10 times as much money as me. Chapter 7, this is for Gary Keller. You're gonna tap out at a certain point in there. But then once you know the information that's in there and you're like, all right, it's 2 years later, listing leads and leverage, it's time to do this. Let me go back and read specifically page 355 to 375. and that's what you do, and that's your whole year, is those 20 pages, the textbook. So if you go into it like, yeah, you can audiobook it, and maybe that's the way to do it for your first time when you're just like, I'm 3 chapters in, and this is great, and then the next 7 chapters are not for me at all. That's probably a good way to absorb the info, but then also get the paperback so that you can flip back and go through it. Tell you all that to tell you this. When they get to the business planning part of it, they break down 3 models for how to do a business plan. And one is the lead gen model, which is basically like, what are the spinning plates you're going to do that are going to generate business for you? And how, like, if you're going to host an open house every weekend, is it realistic to think you're going to close 12 deals this year from open houses?
No.
No, not even close. You might get 4, but that's 40 grand for 2 hours a week when your weekend. You figure out what your hourly rate was, you're going to host those open houses. But like, all right, so you go through and you're just like, I'm going to do 20 deals next year. This many is going to come from this, from this, from this. And then you kind of have a plan for like, where is your income coming from? Then there's your, so that's the lead gen model. There's the economic model, which is about, well, if you do sell all of those houses from the sources you said, how much revenue is going to come in? And then there's the budget model, which we're going to spend almost all of our time in today, which is how are you, like, what money do you have to spend on those lead gen systems in order to generate that income? So if you're going to do open houses, well, you need to buy at least 4 open house signs. Maybe there's a budget in there for wine and cheese or coffee and donuts or whatever it is. Maybe there's a budget in there for flyers when you hop around and do the thing. Like, it's not free. Even if it sounds free, it's all basically free, but it's not free, right? If you're going to spend money on realtor.com leads, like, that might be a good return depending on your business, but like, that costs money. Is that money worth it coming back, right? So budget model is all about how much money are you spending to make sure that it's actually generating that income back. And there's some, you're all going to have settlement gifts, you're all going to have parking tickets, you're all going to have things that are office fees, right? Like, yeah. Like, you're all going to have those things as well that don't necessarily come with an ROI, but are a cost of doing business. But then you can track the ROI of the things that you're actually spending, right? All right, so first year agent, somebody that's not at that $75,000 threshold. This is the model for how you should basically structure the finances of your business. So I told you I'm doing an 8-hour agent financials class in 45 minutes here, so you're getting one slide. Right, so the commission income comes in, it's payable to you. And then I would recommend the best way to do this, if you're not an LLC, is just to open up a ton of bank accounts so that your money is not commingled and you're not going out shopping and spending the money that's for your lead gen budget next month, right? Or the money that you're all setting aside for taxes to avoid that call from Uncle Sam. You're not commingling that with your sneaker money or you're going out money, right? So it's more bank accounts, the better if this is how you are gonna, if you're doing it this way. So, money comes in, things that most people have, right? They have paying down debt, right? Student loan debt, credit card debt, like most people are in this boat, but there's a portion of your commission that comes in that kind of needs to be allocated for this. So what I did as an agent when I was doing it this way is every check that came in, I had it come into like a personal bank account that was in my name. And then from there, I would just look at it after every commission check. I would have a set percentage of that total commission check that was allocated to be distributed into each of these categories. And I just tried my best to not have to, what's the borrow from Peter to pay Paul? Like, I just tried to not commingle the money as best as possible. So maybe that's, 20% of every check goes back into this account, and this is what you pay your office fees and realtor.com and your open house signs, all run out of your business expense account. And then you have your personal expenses, which is your rent, your mortgage, your groceries, your doctor's bills, your walking around money, right? You definitely need to have probably 25, talk to your accountant. I'm just going to go out on a limb and say, let's say 25% of every check you go just get set aside here for taxes. You pay it quarterly or annually, right? Obviously, you're not borrowing that account because that's the one that'll get you in trouble if you don't commingle it. Maybe you have a personal savings account, right? Whenever you have some extra money and you're left over at the end of it, whatever else, you just allocate money to come in here so that you're, building a savings, going towards your savings goal. And then, a portion of every check comes in, you stash for retirement. But all of these, this is not one bank account, because when it's the 27th of the month, how do you know how much money I have in here versus in here? They're all different bank accounts. You can just look at your online banking and say, I have $27 there and $242.02 there. It's just very easy at a glance, and they're free. They don't cost you anything. So that's how I'm going to go. If nobody in this room is currently set up as an LLC, and if you don't hit that threshold, or if you're not there yet, the biggest takeaway should be set up multiple bank accounts and try not to come in. You had a question.
Yes, I have an LLC, but is better the LLC or an S corporation?
Yeah, an S corporation is just an LLC with a box checked that makes it an S corp for tax purposes. You guys should. I am not an accountant. I'm a real estate agent. I'm not a lawyer. I'm just the guy up here reporting the news. So you should talk to your accountant. But it has been my experience, most people that do this are set up as S corps, which is so it's the same process of setting up an LLC, but on the LLC formation doc, you check a box, and that makes sense.
But which one we can have more protection?
I don't know. I'm going to say the answer is probably S corp, but you should talk to your accountant before you start setting any of this up. Sole proprietor model assumes that you do not have an LLC. This is a personal checking account. So this is someone that is not set up as an LLC. And I'm not sure if you were in the room yet when I said it, but the threshold where it makes sense for most agents to become an LLC, like financially, is when they're netting about $75,000 each year. So I would imagine you're probably a capper, or maybe above capper.
Question for you. So should a team set it up as an LLC and then pay their team members out of that? Or?
No. So great question. A team. If you're a team, yes, you 1,000,000,000% should be set up as an LLC, but all of your individual agents still get paid by KWs. All commissions have to be paid from a brokerage to the agent.
Your team members have their own LLC?
Yeah.
Okay.
I don't own Rarity Real Estate. I'm actually a W-2 employee of Rarity Real Estate. And then when I told you I haven't sold a house, but I do refer out my past clients. So I still make a decent amount of money just from being a real estate agent for 10 years and getting those referrals and repeat clients. I give them out to agents on my team. I get paid a portion of that as a referral, and that money goes into my LLC. Yeah. And then my LLC pays, which we'll get into actually right now. Great transition. Let's go. All right. This is the LLC model. So imagine everything above this line, these that are the same color, these are business bank accounts. Right? So my LLC is Andrew Gismondi Enterprises LLC. My clients never called my business. That's not on any of my signs. That's not what I call anything. You can be whatever you want. Rarities is 824 Investments LLC. He just had one laying around from a house that he bought, and he used it for this, right? Your clients are never going to see it. So you can call your LLC whatever you want to call it, as long as it gets approved by the Real Estate Commission. So the point is, once you set up your LLC, the same concept, you're going to want to go to your bank and get a minimum 3 bank accounts that are all under the name of that LLC. So I have 3 separate bank accounts. They're all business checking accounts. Andrew Gismondi Enterprises, Andrew Gismondi Enterprises, Andrew Gismondi Enterprises. When I get a commission check, the commission check comes into one. This is, and then I'll set money aside for corporate taxes. So I basically run a P&L, and every month I determine how much profit did I make. So if I, made a profit of $1,000, I'll put 25% of that into this, the same as you would be doing, where you set it aside in the last model. So you set money aside for corporate taxes, and then I'll come back to the war chest in a minute. This is kind of like your longer savings, still within the LLC. So this account where the money comes into, this is where money comes in, And also all of your business expenses get paid out of that account. So it's really not that different from the slide I had a minute ago where your money comes in here and then you take a percentage of it and you put it everywhere else. On this model, the money comes in, you have your monthly business expenses, but you just basically take out the part for taxes. In this, every month, you're going to have your business expenses, which is your open house signs, your realtor.com, whatever else you're spending on, right? Settlement gifts, whatever else, whatever you spend in your business, but also your employee's salary, right? So if you have a VA, you pay it out of it's a business expense, right? If you hire an assistant, you pay them out of here, right? So everybody's within the business. And then you are employee 01 of your company, right? So you're the owner of the LLC, but you're also the employee of the LLC. And this is where that savings comes in. Remember I said the tax savings kicks in, and the more you sell, the more that savings is going to be. The reason for that is that, let's say this company, let's say it makes $100,000 a year. Let's say that's what the profit is. Let's say it's 125 comes in and you got 25,000 in expenses. That's $100,000. I'm going to pay myself a W-2 salary of, let's say, 40 grand. The rest of this, it made 60 grand more. I didn't make 40,000. I just paid myself a W-2 salary of 40. There's still another 60 that's in there. That 60 I can take out as distribution income. Distribution income is basically like, it's taxed differently. It's taxed at a lower rate than the W-2 salary. So if I say I'm going to pay myself $40,000 a year as an employee of the company, but then as the owner, I get to take out the other 60 at a lower tax rate, the more money I take out, right? If this goes from 100 grand profit, 200 grand in profit, it's still just paid full taxes on the 40. The 160 at that point is being taxed at a lower percentage. The more money I make, the bigger that delta becomes. And, the cost of doing 2 tax returns instead of 1 tax return.
I call it an owner's draw.
Owner's draw, owner's distribution, distribution income. Yeah, those are all technically correct, like accounting terms for that money.
So
But
if you were to go to buy a house,
they can count all of it. They'll count your W-2 income, but you'll also show your tax return to show that you also took this out. Yeah. And they'll ask for your P&L to show I'm under contract to buy something right now. I literally had to send up my current 2025, so I haven't done taxes yet. But current 2025 year-to-date P&L, they'll look at that to determine it. All right. So in this account, you typically want to keep, let's say, 3 months reserves, 3 to 6 month operating reserves. So if every month, if I'm paying myself 40 grand a year, right? That's, let's say it's just to make the number of these. Let's just say a $4,000 a month salary, 48K a year. We're still. Let's say I pay myself 4 grand a month, and let's say my business expenses are another 2 grand a month. So $6,000. I probably want to keep a balance of about 18 grand at any given point in time in this account, just in case I go January, February, March without it. I don't have to put money back in. The business is self-sustaining, right? I can deplete this down. Eventually, I'm going to get a commission check and I'll build this thing back up. 3 to 6 months reserves goes in that account. If I have a big month and I close $2 million in sales and I'm capped, I just put 50 grand into this account. It's just kind of sitting there. But I know I'm probably going to keep the 3 months here, and then any excess I'm going to put in this, which is like the war chest. Just so that I'm, maybe this is a high interest checking account, just like something to do here where the money's still in the business. I haven't paid any taxes on it. It's still in there, right? But like, I'm at least doing something with it. And at a glance, I got my 3 months here reserves, and I know there's an extra 50,000 in this that I can take out at any point in time if I need to. When I take it out, again, it's distribution income. It's not subject to payroll tax or social security tax. It's taxed at a lower rate than the W-2 income. Okay. I just threw a year of grad school at you. Does anyone have questions on this before we move on? Yeah.
Okay. LLC and I pay my, and she talked about like owner's withdrawal or whatever. you call it. I do that, but do you have to like, can you do it on your own or do you have to have somebody and take taxes out? Cause if you're a W-2 employee or you,
Great question. Your W-2 salary, you're going to set up payroll processing the same way, my high school job, I worked at Modell's, I got a paycheck, taxes were already taken out of it, right? So that's going to apply to this. This is just you go into your online banking and you just move 1,000 out of this to your personal account. And your bookkeeper or your accountant is going to see that transfer took place, and they're going to categorize this owner's draw. It is still a taxable event, but you don't have to like mark it or do anything along those lines.
if you just hire some sort of payroll.
The payroll company doesn't even get involved in this,
On,
but over
For
that,
the W-2.
yeah. And I'll be honest with you, when I was a sole proprietor, and for 2012, 2019, when I set this thing up, my taxes were the hardest. I used to just want to pull my hair out every year and be like, oh my God, I have to take like 2 consecutive weekends, lock myself in a room and just try to figure out what I made last year. It's just done. I don't even send an email. I just probably go to the portal and pull it out and it's right. I don't have to think about it. Like for that reason alone, it's worth the little bit of money that I pay for it.
So are you paying an accountant monthly to do these things? Like,
No, I pay my accountant once a year.
okay.
I have a bookkeeper that updates my profit and loss statement on QuickBooks because an accountant is going to charge you $200 an hour, maybe give or take, and a bookkeeper is usually 60-ish an hour. And honestly, bookkeepers are usually better than accountants doing this because all they do is they're just in QuickBooks like a
You
champion.
can open QuickBooks.
Yeah.
I use QuickBooks, even though my accountant and bookkeeper
Oh, yeah.
access to my QuickBooks.
You could a lot of people just, a
Well, you
lot of
can-
agents do it yourself. You get QuickBooks online.
Mhm.
You just pop in with a username and a password. You can just do it yourself. So if your business is pretty lean and you don't have a ton of expenses, you pay, I want to say
$40, $50.
40, something like that. Something, yeah. And QuickBooks also, they didn't in 2019, but they do now also offer a payroll processing, so you can bundle the whole thing together. And I think they do other stuff too. I forget what
They do a whole bunch of stuff.
Yeah.
They'll tell you.
Yeah. Yeah. I like my bookkeeper a lot, and it's just kind of easy to just be like, send me the detailed one. It's back. Do it. I'm bad at computers, as you can tell from my 2019 PowerPoint. This is as good as I can get. Any other questions on this?
No, so
Yeah, I mean, maybe.
So you're essentially going to one bank and just opening up multiple accounts in that
Yeah.
one bank.
Mine are at PNC, and they probably shouldn't be. I should. Who has the time? Alright. So we talked about this, but just to recap, when you're a sole proprietor, you're self-employed. With this, you're not self-employed. You own a business, you're employed by that business. So you're no longer self-employed. Again, talk to your CPA because like a lot of times the sole proprietor is contributing to like a SEP IRA. You're not self-employed anymore. So you got to kind of shuffle that stuff around. One call to your accountant is really all that this takes to kind of figure this out. I am not qualified to talk about it, but one call and you'll get all your answers. What else we got? Yeah, you pay all the applicable taxes for your W-2 salary, but your owner's distributions are exempt from certain taxes. So that money is taxed lower, which is why the more you make, the more you save. I wrote in 2019 when I talked to an accountant, they told me 50 grand was the threshold. I am now being told that 75 net is the threshold. So that's not you getting 75 on your 1099. That's you getting maybe 85 on your 1099 and having about $10,000 in expenses. So your net would be 75 is kind of your break even, which if you're a capping agent, you're probably right in that ballpark thereabouts, right? Quick math. Yeah, we talked about all this. All right, so funny story, right? So, I know Pennsylvania like the back of my hand, right? I mean, I got my 10,000 hours with a broker of record. I can do PA, no sweat. Delaware, I kind of got on a lark. I never even showed a house in Delaware. I don't know shit about the Delaware Real Estate Commission. So the next couple slides are all about how it works in PA. However, I did confirm with a couple different sources, you can absolutely do this in Delaware, but the terminology is going to be different. So it's not called a qualified association, which is what it's called in PA, but it's the same general idea. You form an LLC, and then you have to talk to the Delaware Real Estate Commission to get your LLC certified so that your LLC is licensed to sell real estate and can collect a commission check, which is just as easy as you have to just register it with them. In PA, I think they charge you like $100 registration fee for it. It takes like a week. You get the documentation back. You give it to Jim Keenan. You're set up. You can do it. In Pennsylvania, they have honestly kind of dumb rules around what you like. I started this whole thing off by being like, mine was called Andrew Gismondi Enterprises. None of my clients ever knew that, and Rarity is 824 Investments LLC, and no one has ever heard that out loud until right now. But in Pennsylvania, you're not allowed to use the words real estate, sales, realty, property, because they don't want it to look like it's a brokerage. Well, no one's going to look at it. It doesn't make any sense. And then there's no rules around team names. I'm allowed to call it Rarity, which is a made up word, but I'm not allowed to have that LLC that no one will see called RIP. So I don't know. That's how PA works. It's best not to think too hard about it. But yeah, kind of the same. This is just instructions for how to do it in PA. In Delaware, if you're interested in this, just call the Real Estate Commission and just ask them. They'll tell you the answer. All right. Once you set up your LLC, you have the LLC formed, and maybe you got it certified with the Real Estate Commission. You have to get the bank accounts, right? If you get it done, you send it to Jim, and he gives you a commission check that's payable to your LLC, but you don't have a bank account, you can't cash the check. So you have to get the bank accounts in line. So, like I said, you're going to need 3, maybe 4, just so that you don't commingle. And then the monthly P&L. So you set this thing up. At the time, QuickBooks was 20. It's now 45-ish. You just get it set up. You can do the online one. You can get a bookkeeper, however it is. But you're going to just make a QuickBooks account and just sync QuickBooks with your business checking accounts. So QuickBooks will now see all the money that comes in and all the expenses that go out. And then obviously, all of your recurring expenses, anything you swipe a card on right now that pays something, take it out of the personal account and have it be your business checking account that is paying for those things. So the idea is QuickBooks will automatically see every dollar that comes in and every dollar that goes out. QuickBooks will not see your, dinner plans and what you do on online shopping and Amazon, because it's not related to your business expenses. It'll just see your business income, your business expenses. All right, so going back to Millionaire Real Estate Agent. Millionaire Real Estate Agent is written in 1999 this is the book. They literally invented a real estate team in this book. Did not exist before. They invented the idea of a real estate team in this. I'd say when they put this out, there was not a single agent anywhere in America that was netting $1 million. There are now, I believe, 8 of them at KW Power. So it caught on. So it works. Each one of these columns is ballpark what the production would be. They're also assuming a 3% commission, which is not a thing anymore. But the general idea here was, if you're a $6 million producer, your gross commission at 3% income is about $180K. They were assuming a market center cap of about 20 to 21,000, which is surprisingly still kind of in the ballpark. That means this minus this gets you to your gross profit. They were budgeting 33% of that for expenses, so this is what your net income would be. So I'm going to just go on this first column. Like I said, remember in the book, there's a point where it stops being applicable. We're going to stick around here. Right. So the next page, this is also just screenshotted out of there. This is that same column. The expense. This would be something if anybody's taking pictures, take a picture of this one. essentially what this is one of the really, really impactful things that they invented with this book is that they were researching this thing. And the story is that like Gary Keller was like calling around, he talks to the top agent in New York City and he'd be like, what do you spend on advertising? And they'd give him a number. And then he'd talk to the top agent in California and be like, what do you spend on advertising? And it'd be a totally different number. And it would be because this guy has one line item for advertising, one line item for print advertising, one line item for signage. This one considers everything to be advertising. They're not speaking the same language. So what he did is he came up with a chart of accounts and said, these are the 9 categories. There's not a 10th category. So anyone that runs a P&L in real estate, all of your expenses are going to fall under one of these 9 categories. Do not use a chart of accounts. And by doing it this way, you can literally run like the MREA gives you, whatever your gross income is. The majority of your expenses are going to be salaries and lead gen, right? Like and you don't have to have a full-time assistant, right? Like salaries might be your transaction manager. That's $350 or $400 per deal salary. Salary might be, the showing agent that you pay $100 a month to cover you when you're at your kid's baseball game, right? It could be a part-time assistant. It could be a part-time VA. It could be all these things. They are still salaries. So you can still buy leverage for your time, even if you're not making 200, 300K a year. If you're making 80K a year, you can still absolutely pay a kid on your block to run around and flyer the neighborhood. That's falls under salaries and it still buys your time back, right? Lead gen, same thing, like 10% is a healthy amount to be spending on lead gen. How many brand new agents do you know that go out and they're like, $5,000 a month on Zillow leads, let's do it. Yeah, good luck with that, bro. You're gonna get 30 grand in the hole by the time the first deal cashes, right? So like, it just gives you a rough blueprint of like what is an appropriate amount to spend as your business continues to scale. And you'll see 11%, 10%, less than 1, 2, 1, 1, 1, 2, 1. All of these are things that, count and they should be budgeted for, but they're not big expenses. Where you're going to end up spending your money as you make more is leveraging your time and something that has an ROI that's going to generate.
So paying a neighborhood kid.
Yeah.
Say you're in an LLC and everything.
Mm-hmm.
Are you writing it out of a business check to a business check?
You write him a check. You could take out $100 in an ATM and give him the $100 cash. It's still going to see on your QuickBooks that you withdrew $100. You tell your bookkeeper, you log in QuickBooks, and you just say salary neighborhood kid.
Okay.
Yeah. So it's accounted for. So this is an example, right? $1 million a month. So let's say you sell a $1 million house, 2.5% commission. Your gross commission in this situation, total commission income is $25K. Let's say you're on an 80-20 split. I don't even know what the splits are. Sorry. Let's say you're on an 80-20 split with the brokerage. That means you're getting 20, the brokerage is getting 5, assuming you're not capped, right? Let's say you're paying yourself a salary of $48,000 a year. That's $4,000 a month you paid for yourself as a salary. Let's say your total expenses, not including your salary, just your business expenses, Zillow, open house signs, settlement gifts, parking tickets, $3,000. So your net operating income, what did you actually make that month? Your 1099 says you got $25,000. What did you actually make? You got 20. You paid yourself 4. You paid everybody else 3. You walked with 13. Of that, you set 30% maybe aside for taxes. It's not commingled with everything else. You got this 3,900 that's left over. That 3,900 is the part that stays in your operating account or goes into your war chest. 13 minus, so your after-tax profit is that you made this 13,000. You set aside 3,900. You're left with 91,000. So you've made a salary of 4,000. You could take an owner's draw of as much as 9,100, or you could leave this in your LLC so that you have some money for next month.
So would you base your salary, right? Because it's like we all would love to have all the income and do whatever we want with it every month, but like, are you coming up with your salary with what your monthly expenses are for bills? I mean, and maybe a little cushion. Like, where do you?
That's a great question. There's a couple different ways you can do it. So, you typically want your salary to be kind of artificially low. So in that example I gave earlier where the business itself actually made 100K, you're going to pay yourself a salary of, let's say, 40, 48, something like that, because the savings that you get is the owner's distribution. That's where you save the money. So you just, from tax purposes, the salary has to be like an actual like salary level. Like you can't just have it be like $1,000 or $5,000.
Yeah, yeah.
You know, it has to be commensurate with the job of being the CEO of this company.
Mm-hmm.
So the CEO of a $100,000 company can pay themselves 40. That's not crazy, right? And then the rest is owner's distribution that you're paying to yourself. So even if it costs you $70,000 to live, you would probably pay yourself the 40 to 48, take out the rest as owner's distribution, and you could choose to take out all of it up to 100. You could, right? Because that's what it made. You could take out 80, leave 20 in, and then next year you have 20,000 set aside. And earlier I was like, how do they have 20 grand to pay for an assistant? Because you didn't take it all out and spend it on sneakers, which is what I was doing, right? So like, if it's in there and you're being cognizant of how much are you actually spending in your life and how much do you need to take out of your business and the rest is in the business earning interest, or being available for you to say like, I got a great idea, I'm going to spend $5 grand a month on this thing, and because in 3 months I'm going to make 30 grand back in commissions, like you'll have the money set aside that you can invest and get it back in growing your company. Yep.
Quick question, just so I understand. With that breakdown there.
Yeah.
With your salary there is $4,000 a month. So if you're a W-2 employee, you're gonna get taxed on $4,000.
Yeah.
And that $9,100 you're putting all into the distribution.
Yeah.
And that's taxed at a different rate.
Tax at a lower rate.
So
Yeah.
even if you take money, you have to pay. So you're paying on the different rate for two different things.
Great question. So, in this example, right? 25,000 is what the gross commission is, but I get commission check into the LLC. I've paid myself $4,000 a month out of that, which is 20 minus 4 minus my expenses, 13 number. And out of that, I had 30% that I was stacking aside for taxes.
Is that the corporate tax?
Corporate. So, in that scenario, 20 grand comes in here. This is 3. This is 4. What is it, 31 or 3,900? 3,900 is set aside here for corporate tax. And that 9,100 is here. I can take out the full 9,100 because I already set aside the tax. So at the end of the year, I have 2 tax returns. One is for my personal taxes. Well, this I got a paycheck, they all that. I don't have to worry about it. Full amount, like that $4 grand a month that I paid here, probably 1,000 of that is held by my payroll processor. The rest is paid to me, and I can spend every dime of that money. The rest of this that's over here, I already have this set aside. When my business, I do my personal tax return here. I do my business tax return here. I just write the check out as a color and I have money for it. So that 9,100 is there already.
If you're only, actually, so the big savings is instead of getting your, I guess, personal side, you're only getting taxed at $4,000 and then a separate.
Yeah.
2 separate things. Instead of getting taxed at $13,000, you're 9 and 4 in 2 different rates, and that.
Yeah. So you're close. So on this, in this example, just for easy money, and I assumed that 30% could go into. I'm not getting tax action. The real number is probably 20, like that. I just threw this out for round numbers, not use people. But like, when you talk about a tax refund, right at the end of the year, when I pay all the taxes out, I'm gonna have money that's left over in that account. That's my tax refund. It's still in the business. I just would move it out of the tax account and just into the operating account or into the war chest. Take the money out.
But just remember, you're gonna do 2 tax.
Two tax
Right,
returns.
that's the big
Yeah.
thing. It's what I'm doing now at LLC, is splitting all that, but I'm not doing the corporate, I'm doing one tax.
Right.
Yeah.
And I think that's a
Yeah.
big difference.
Yeah.
All the other stuff is the same.
Yep.
Just doing one thing is.
So I'll say this, my personal experience on this when I set this up was I had an accountant I was working with and I came to KW, I got exposed to all these ideas, right? They laid this thing out. I'm getting, Snyder, and at the time Noah Ostroff was the OP, and he's, flipping 200 houses at a time, and it's just like these very, very big people that are just way more successful and rich than I was. And they're like, no, this is how you do it. And I go to my accountant, and my accountant's like, no, it's not. What are you talking about? And I really I went back to them like, I feel like,
You trying to set me up?
what's going on here? And what ended up happening was I told him, I was like, my accountant, I was making probably a 150, right? And he just was like, why are you building the thing for this big company when you're making, I was like, bro, I'm trying to do more. Like, that's what we're building towards here. So it was like, he didn't see the vision. He was like, this is what you have right now. What's wrong with the way everybody else does it? And I was like, I'm trying to go. I want to build something for as like a foundation for what I'm doing. I'm about to hire somebody like this I'm not running the business I have now forever. I'm trying to grow it. And then he was like, oh yeah, I get it. Well, in that case, let's do it this way. And it was all right. I'd like twist this guy's arm and like do the thing.
Because you were saying that the total 75,000 there.
Yeah.
So there was not a big savings. If you want to.
You're gonna break even if you're making 75. But if you're making 175, you're probably saving 10, 12 grand. If you're making 275, you're probably saving 15 to 20. If you're making 500, you're probably saving 30. If you're Mike McCann. That's everything I got. So I can do questions or how was this?
Very good.
Very.
There you go.
I always thought you had to do like the corporate tax, you had to be like an S corp. You couldn't be an LLC.
And like so an S corp is an LLC. It's just been designated as a type of an LLC. And I'm sure that that I'm doing this in Delaware. It just so happens that Delaware and Pennsylvania have the same setup. But I'm sure if I went to some of the states in America, that would not be the proper way to do it. There's probably maybe it's a partnership or maybe it's a corporation.
I don't remember registering my LLC with Delaware.
If Jim's paying you to it, then you did everything right. Though it's not your problem. Yeah. Hey, there you go. I'll work here.
Yeah.
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 Igual no hay confío.
Yeah. Oh.
Oh my God.
Yeah. All right. I enjoyed this. Thanks for having me. And
Thanks for the information.
yeah, appreciate you guys.